Closing entries. Closing entries happen at the very end of the month, after you have completed your 3 financial statements. And they only involve everything that is under the umbrella, the owner's equity umbrella. They do not involve anything that don't involve capital, they don't involve liabilities, they don't involve assets, they only involve the things that are occurring under the umbrella. What did I just say? Occurring where?
Under the umbrella.
Under the umbrella. Does it include capital? No. Does it include liabilities? No. It only includes the things that are where? Under the umbrella. Okay? Now, what our goal is going to be is that we are going to take everything that is under the umbrella and draw it like a straw into your capital account. So, I know that we're supposed to have numbers all over here too, but I'm just going to make up some pretend balances for this side for us to work with. Are you okay with that? So I'm going to say we have $2,000 in our capital. How much money do y'all want to have made this time? Remembering, let's do small numbers that I can remember. 2,100. 2,000? Okay. We'll do 2,100. Thanks, Jane. Okay, I didn't want to do 2,000, Jared, because of this 2,000. Okay, what's another number as far as our telephone expenses are concerned?
$50.
$50 worth of phone. How many wages did we spend?
1,200.
1,200? Well, you're making me really have to add. Let's don't spend that much. How about 500? Is that okay? Let's do 500 in wages. And how much did we take home?
200.
200. That looks like a 7, probably. $200. So, at this point, I want you to write everything that we have on the board down, but I do not want you to write what I'm going to do next on the board, on your example. Okay? Because I'm going to show you something first, just to make it more meaningful and easy to understand, and then we'll move on from there. So I'm going to show you something first that I don't really want you to take notes about, okay? Just listen instead. If our goal is, here's my capital, which is a reflection of the owner's part of this business, right? I don't owe this money to anybody. It's not an asset that's a tangible or even an intangible thing. Instead, this is the stuff that has happened in my business because of my business. So, our revenue, we have already said, is going to do what to our capital? Is it going to increase our capital? If I had to, and I need some participation here, if I had to get this $2,100 credit and put it into this capital with a transaction that only involved one debit and one credit, how could I make this disappear so that revenue would be 0 and the $2,100 would have been sucked up into the capital? But I only have one debit and one credit. How could I make that happen? Let's think about it for a second. What would I do to this, first of all, to make it 0? How could I make this a 0? Bradley? You said it. Spend it? Yes. But on paper, how would I make this so that the balance of this is a 0? What would have to happen? Jameson? It would have to be a debit of 2,100. Is that right? Would that make it turn into a 0 balance? So if I debited 2,100, for every debit there has to be a credit. And where did I want this 2,100 to be? Did I want it to add to my capital?
Yes.
So wouldn't it be right here? Would that be my debit and a credit to get it there? Does that make sense? So with one transaction then, with a debit and a credit, I could make this a 0 and bring it up into that. Thumbs up if you agree. Okay, hold on to that thought, because we do have to add a middle step to this, and we're going to add that in just a few minutes. So this isn't the final outcome, but I'm leading you there to it right now, okay? So, what about these expenses? Ever since chapter 2, we've been saying that these are really going to do what to capital? They're really going to be subtracting from my capital. So what if the end of the month comes and I need to make these all zeros and make these guys actually subtract from my capital? How am I going to get them there if I only have a debit and a credit? How would I make this a zero? Moving it, change right, moving it here, right? And what would be my debit? If that's a credit, you know, for every debit you have to have a credit. It would be, does everybody agree? Would it go there? Would that actually then take that and move it up there where we've been talking since chapter 2, that it was going to eventually subtract from that? Right? Would I need to do that for all of my expenses?
Yes.
So each one of them, in order to make them a zero, I have to take their balance, whatever their balance is, and I have to subtract it out. And then that becomes the minus. So here's my debit, here's my credit. Here's my debit, here's my credit. And now these guys are zeros. Thumbs up if you agree. Okay. I don't have lots of thumbs. So tell me what's missing. Are you good? You're just thinking. All right. Now, let's say that we are AT&T. We're a big company. And we have more than 2 expense accounts? Probably. Right? Maybe lots of expense accounts, right? We probably have more than one source of revenue as well, don't we? It probably is rather extensive. So, because of that, also remembering all the way back to chapter 2, your generally accepted accounting principles means that everybody does it the same way. And even a small company that doesn't have a lot of expenses or a lot of different sources of revenue is going to do it the same way. And instead of moving every one of their expenses individually up here and every one of their revenues individually up here, that makes the capital account way too cluttered. Because you've got lots of things coming and going and coming and going. And so instead, the generally accepted accounting principles is that this is what goes into your capital account. You're going to have your investments that's going straight into that. Isn't that what we've been doing all along? Somebody invested $2,000, it went there, and it went into cash. Investments are going to go there. Drawing is going to come straight out of there as well. And net income or a net loss is what's going to be reflected inside your capital account. So instead of moving your revenue straight up and your expenses straight up into it, they want you to instead only put in your net income or your net loss. So in order to do that, we're going to need one more account that you've never seen before. And it's just a little temporary account. We're taking it out of the bottom drawer. We're going to use it briefly, and we're going to put it back. And we're not going to even see it again until the end of next month. I'm going to try to get a different pen. I forgot to bring my pens in here with me, so let's hope that there's something that will write. I'm going to call it, can you see that pink on that?
Yeah.
I'm going to call it, I'm going to sit it right here just on my umbrella stem for visual purposes, because I'm going to make me a new account that you've never seen before, and it's going to be called Income Summary. And isn't that what an income statement does? Is it summarizes your income? It summarizes your revenue minus your expenses. That's all that's involved with it. It doesn't, your income statement doesn't involve your investments, and it doesn't involve your drawing. It only involves your revenue and your expenses. And that's what we've just put up here, right? So instead of closing each one of these this way, we're going to summarize all of our revenue and all of our expenses into this account instead. Think about this account being revenue side. You see why I drew it here? I hope that will click with you that it's on the right-hand side, over here where the revenue side is. This is going to be your expenses over here on the left-hand side. So, if I am not moving directly into capital, but yet I need this to be a 0, instead I'm going to move him over into my summary account instead. What's my debit? Everybody agree? 2,100 here. And my credit will be that I'm going to summarize it right there. Now this is a 0, so it's finished. Let's look at the rest of it. How would you go about putting these expenses, making them a 0, and placing them into this income summary? First of all, how do you make them a 0? Am I going to, that's going to be my credit? Does everybody agree with that? My balance would be what I'm going to have to subtract out. And I can actually just put one, I can combine them all. So that would be a total of 550. So this reflects my revenue, and this reflects my expenses. I have summarized my income in this little temporary account. Are we good? I like to use the words empty and over. I'm going to empty it, and I'm going to move it over. Same way here, I'm going to empty it and move it over. Empty and over. We good? Now, if this is my revenue, this is my expenses, the difference between these two would be what? What is the difference between revenue and expenses? We just did an income statement a while ago. Net loss or a net income, right? And in this instance, did I make more than I spent? So I have a net income. The difference between those two is what? How many dollars? 2,100 minus 550 is what? So my balance of this is 1,550, which, by the way, is my net income. Everybody agree with that? Would that have been what would have happened if I had 2,100 up here and 50 and 500 up there? I would have been adding a total of 1,550 on this side, right? So I'm doing the same thing. It's just that I'm summarizing these first so that I'm not making a jillion different things and cluttering up my capital account. I'm summarizing my income. Remember, drawing has nothing to do with income, so it doesn't go here at all. Now my next step is I still have to get this net income here. So remember, this is temporary. I'm just using it for a minute. So now I've emptied out revenue. So is it empty? Can I erase it? It's gone. It's zeroed out. These guys, are they zeroed out? Yes, they are zeroed out. They're all empty as well. Now it's time for me to empty this one into